as a resource for CanWCC members. There is a lot of us here that really want to keep going back to this gem topic and make sure that we, even if we don't take all the good notes today, we know that it's somewhere in Circle. So this webinar will be recorded. So I just turned that on. This is, like I said, a recorded webinar, so it will be live on the Circle platform after this event. And today we have Nancy here to tell us or to discuss or explore the habit we need to develop to stop avoiding your books. Bookkeeping principle for self-employed women. This is a great topic. We know how it is when you run a business and you have multiple tasks. You are wearing multiple hats, including being your bookkeeper sometime or most of the time. So we are very excited to be discussing tips or how to make it work, some of the principles that you have to follow through because accounting is accounting. You have to do it the right way. There's no other way around it. But before we dive deep into this webinar, like I would like to introduce myself. My name is Karine Bado. I am the event and programming manager here at CanWCC. And a little bit about myself. I love working with entrepreneurs. I've been in entrepreneurship for over 8 years now. I am a mom. I am an entrepreneur myself. I wear many hats like many of you. And today I welcome you from the land of the Anishinaabe, Cree, Ojibwe, Dakota, and Dini peoples, and home to the Métis Nation covered in Treaty 1, colonially known as Winnipeg, Manitoba. And the Canadian Women's Chambers of Commerce is the first and the only chamber of commerce for women identified and gender diverse business owners in Canada. As a chamber of commerce, we represent your needs with the government, and our position and title as a chamber gives us access to people who impact change. We exist to improve the quality of life of over 1 million Canadian women and gender diverse, self-employed, small business owners, and through advocacy with policymakers, we aim to build a healthier and more inclusive Canadian economy for all. We are here to amplify the stories and the voices of women identified and gender diverse entrepreneurs, self-employed, and to fight for the economic equity. So now today, let me introduce you to our host of the day, Canadian Women Chambers of Commerce, very own CEO founder, Nancy Wilson. She's a CPA, CGA accountant herself. And Nancy is the founder of the Chamber of Commerce and the CEO. And she is a chartered professional accountant with over a decade of experience in accounting and finance in private sector, working with startups, small businesses, and multinational corporations. In 2015, she founded an accounting and advisory firm specializing in women business owners and entrepreneurs. After experiencing the lack of resources, difficulty finding connection, and numerous barriers, both as business owners and indirectly through a client, Nancy launched the Canadian Women's Chambers of Commerce in January of 2018. She has been working ever since to build a powerful national work network and drive the policy changes needed to create lasting gender and economic equity in Canada. So now, Nancy, please take the stage. We are really looking forward to learn more from you.
Thank you, Karine. Welcome, everyone. Thank you, everyone, for spending some time with us today. As Karine mentioned, I am a CPA, Chartered Professional Accountant. That's what I trained to do, and I did it for over 2 decades. And I am very much an accounting nerd. I love it. I love doing it. I loved working in accounting, and now I still really get, jazzed up about working with business owners and self-employed people and helping them sort of integrate the financial side of their business into strategy and making sure that their finances are making sense to them. So I'm going to share my screen. I have some slides and I'll do hopefully a relatively short presentation and then take some Q&A. Uh, I do recognize at least one person joining us today who is also an accountant. So I hope that I'm not too rusty after being out of the game officially for about 8 years. But hopefully, what we're covering today hasn't changed too much. Okay, let's see. Um, all right. So can everyone see my slides? Yes. Okay, I will share the slideshow. So what we're going to talk about today, as the title of the event said, is how to stop avoiding your books. So I know that for folks who are not a big accounting nerd like myself, doing the bookkeeping, staying up to date with your bookkeeping is probably last on your list. And we all procrastinate about doing things that we don't enjoy. And if you are uncertain about how to do bookkeeping or it's just not your favorite thing, then I can understand um, why you may choose to do pretty much anything other than that. But it's really important to stay up to date for a variety of reasons. So, I mean, first of all, it's easier to do it on an ongoing basis. Like most things, if you tidy up every night, it's easier to keep your house clean. Do I do that? Maybe not, but theoretically, it's easier to keep a house clean if you tidy every night. It's easier to keep your books up to date if you do your bookkeeping on a regular basis. Having current and up-to-date books means that you can actually use your financial information to help you make decisions in your business. You need up-to-date information to look at that information from one month to another and use that information strategically. Um, it also allows you to take advantage of opportunities that come along. If a grant comes up, if a loan comes up, something that requires you to submit financial statements, then you don't want to be in a big rush all of a sudden trying to figure out how to get all these transactions into the accounting software, into QuickBooks, and then do it properly and make sure that the financial statements are out there. If you have your books pretty much up to date, you can make that happen relatively quickly, but it's a real struggle if you haven't been keeping things up to date. And it's the best way to audit proof your business, is what I say. Whoops, why is this not working? Okay, how to audit proof your business. So audit is the big scary word, right? The CRA may choose to audit your business, and so you have to think like an auditor. And I'm going to go over this with you today, how to kind of think like an auditor. And to be fair, no person can actually fully audit proof their business. But they can take steps to protect themselves should the CRA decide to ask questions or audit. Um, and most times they're probably just going to start by asking some questions, provide this receipt, whatever. If you keep your books up to date and you keep good records, which are always going to be easier to do if you keep up to date with things, then most of the questions that the CRA are going to ask you are easily dealt with. And folks really shouldn't be concerned as long as they have their books set up and their records kept. Um, so the first thing, we'll talk about record keeping today and how to think like an auditor. Um, the 3 C's of good bookkeeping: compartmentalize, categorize, and consistency. and then bank reconciliation. So trust but verify. These are three things that you want to be doing on a regular basis to keep things up to date. And as a business owner, you don't have to be an accounting expert or a bookkeeper to do this as a self-employed person. If you do these things that I talk about today on your own as a self-employed person, this is going to help you um, if and when you're in a position to work with a finance professional, and you're going to be able to get a lot of bang for your buck with that finance professional if you've done some of this groundwork. So, how to think like an auditor. Let's keep some good records. So, first thing, what are we recording? We're recording your business transactions. So there's income coming in, hopefully, and then there's expenses that you deduct from that income. That is hopefully, the way business is working. So how do you determine what is considered income from the CRA's point of view and what is considered expenses? So on the one side, income's usually pretty easy to identify. You have your operating income. That's sales, essentially. What do you get when you sell your products or your services to customers, clients, other businesses, depending on who you sell to. Um, Business expenses, this can be trickier. So I have had a lot of people over the years, certainly when I was working as an accountant with business owners. Sometimes it's very clear what a business expense is. Other times, not so sure if they're able to actually claim something as an expense for their business. And the two things that auditors or I'm going to use auditors in general as what I mean by that is someone working for the CRA. And by CRA, I mean the Canada Revenue Service, um, the folks who process our taxes and make sure that we are being honest on our taxes, both business and personal. So the main things that they're going to be checking up on, because taxes in this country are based on an honor system. We fill them out. We say, this is the information. I swear it's true. And there, file this and just believe me, I promise. So then when they see something and it doesn't make sense to them, or maybe your name is just picked out of the lottery, then they come to you. They want to make sure that you are, one, claiming all the income you made, because they want to get the tax owed on every cent of income that you've made. And they don't want you claiming expenses that are not eligible to be deducted from that income, because the way they determine, or you determine, how much tax you owe is all of your income less all eligible expenses equals the net income upon which tax is calculated. So if you claim a whole bunch of expenses that aren't eligible, you're going to owe less taxes. If you don't include some income that you should have claimed, you're going to owe less taxes. That's what the CRA auditors are concerned about primarily. So income, fairly straightforward. Expenses, less straightforward. There's also property income. This is essentially rent, royalties, license fees, um, passive income, things that you don't actively sell, but sort of come to you in a more passive way, considered rent, even though we all know well, we don't all know, but being a landlord is not necessarily a passive operation, but it's considered passive property income. The main thing that most folks claim under the property or passive income category is interest. So any interest that you earn has to be claimed. All right. So how do we determine if an expense is deductible? So three big criteria. It has to be reasonable, it has to be measurable, and the big one, it has to be related to or used to generate business income. So there's not a big long list that the CRA has or a big long list in the Income Tax Act that tells you these are all eligible business expenses. Instead, there's a tiny list in the Income Tax Act that says these specific things are not allowed. Things like fines or penalties. If you get a parking ticket while you're having coffee with a client, you can't claim that. But but you can claim parking fees because that's an expense that you incurred while doing a sales call or a discovery meeting or selling something to your client. But in a perfect world, you would actually pay for that parking and you wouldn't, you know, run afoul of the law. And so the parking penalty that you received is not deductible. So tiny, couple things that are just always ineligible as business expenses. And then everything else is kind of up for consideration. And it really comes down to what type of business are you in and what are your business activities. So a couple of examples here, and I'm using pretty ridiculous examples just to give you an idea. So here again, you want to think like an auditor, um, but here you want to put yourself in the shoes of I'm a business owner and I'm talking to an auditor who's saying, why did you claim this as a business expense? Explain to me your rationale. So, shoes. Um, Normally, if you claim the purchase of, a whole bunch of shoes, shoes are considered personal items. And shoes here means, clothes, shoes, um, something like that. Those are personal items. Typically, they are not deductible because they are purchased for personal use, not business use. Now, we all know that as women in particular, if you want to meet with clients and run a business where you're out and about, you do end up incurring a lot of expenses when it comes to your wardrobe, but it's still considered a personal expense. The CRA is not going to allow clothes and shoes as an expense deduction. However, if you were a shoe designer, you could say, like, you could purchase shoes and claim that as, let's say, a research and development expense. That that would probably be allowed. If you were, let's say, a webcam entertainer, you, in my opinion, should be able to and could put forward a rationale to the CRA saying that there were certain costumes that you purchased for business purposes as a webcam entertainer, and perhaps some shoes were included in those costumes. So, is it reasonable if you buy like $50,000 worth of shoes for research and development? Well, maybe if you're like a top level designer, maybe that is reasonable. For the average person, probably not. If you buy $100 worth of shoes and you're a webcam entertainer, probably that is reasonable. Measurable, yes. You have a receipt, the amount that you've paid is clear. And the key is it related to my business? Is it used in the course of earning income? Makeup, same idea. Normally, makeup, personal item. If if you are an artist, if you're a dancer, if you're a performer, if you're an independently, uh, if you're a self-employed artist, you may have to purchase and provide your own makeup for performances, in which case makeup is definitely a deductible expense. Things get tricky when if you use makeup for personal makeup, as well as the makeup that you use when you perform professionally. But that's a separate issue. That comes down to how to allocate those two percentages. But makeup for sure, if you use it during your business as an artist, it should be deductible. I don't doubt that the CRA will look at something like makeup if they see it and say makeup. That doesn't make any sense. Makeup is a personal item. But what I'm telling you is if you have a strong, firm rationale that's logical, don't don't be scared to claim legitimate deductions. Books. Business book. Start with why. Totally legitimate. You don't want to buy a whole library full of books, but some level of professional development is totally acceptable. Reasonable, yes. Measurable, cost of a book, totally measurable. Again, professional development can be considered used to generate business. Um, this book, hard to say, you know? Maybe maybe if you are a romance author, could be some research and development. Maybe if you're employed as an illustrator for romance author books. I don't know. There can be um, there can be situations where even things that you wouldn't think would be related to business are related to business. So I just want to encourage people, don't be afraid of the CRA, okay? Because the CRA thinks in one way, because they encounter the things that are very common. But not all of our businesses are common, and more businesses are atypical. And those atypical businesses are more likely to be questioned, but that doesn't mean that those atypical businesses are doing anything wrong. Keeping good records. Okay, so what records do we need? We need a paper trail. We need relevant information in that paper trail. You know, what's the date? What did we pay? What is the description of the actual goods that we bought? What is the tax that we paid? All of those things. We need matching documents showing what 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 was purchased, what was paid, how we paid, and then we need those documents to be actually entered um, into our accounting record. Oops. Right. So, and we need it to be recorded in an appropriate expense category. So here's an example for an expense, a recent expense that I had. So Zapier, I'm still not sure how to pronounce that. Here's the invoice for the October 2025 expense. Uh, you know, got it sent to me via email. It breaks it down what plan I'm on. There's a discount, there's HST, although there was no HST charged. It shows here that it was charged to an American Express card with the last four digits. And then what I would do also is I would go and I would print to PDF my American Express statement showing that this Zapier charge was actually charged to my Amex. And then I would go into the books and I would record the expense on the date that it was charged, October 17th, to something like software. Tips. Obviously, keep all your receipts. This is much easier these days with things happening online. You don't have to keep, hundreds of paper receipts everywhere, but you may still have paper receipts, especially if you're going for a lot of coffees with clients or parking a lot. Um, Make notes on your receipts, paper trail. So what I used to do is I had like a plastic zip envelope that you can get at like the dollar store, um, and a pen. Uh, in I would keep it either in my bag, and I would keep another one in my car and I would put those receipts in those two specific bags, and then I would clear them out on a weekly basis to do my bookkeeping. So I would always know when I got back in the car, I'd put the receipt in one of these two baggies, and if I needed to, I would take the coffee receipt and the pen, and I would write down the client's name, and I would maybe even write about um, whether it was a new client and we were talking about some sale, or if it was, I would make whatever notes I needed so that at the end of the week, when I was doing the bookkeeping, I knew I could recall, oh, right, this is for that meeting, and we discussed that. The notes are essential, but the notes aren't going to help you if you're looking at that receipt and looking at those notes 12 months later. It may jog a memory, but a lot of times it won't. So this is again why it's important to keep up to date in your bookkeeping. Screenshots. So even if you have things that are emailed to you and you have them saved, still screenshots are important. Like I did a screenshot of my Amex bill there. I'm not going to save my entire personal Amex bill to my business records. I just want to show that one transaction. So I use screenshots, and then printing to PDFs, saving these things in the cloud is good. Using a file naming convention keeps things pretty tidy, and you can go into your folders and find things pretty easily. These are just tips to keep things organized. All right, so let's move on to the three C's: compartmentalize, categorize, and consistency. So I'll go through these pretty quickly. Compartmentalize, this means you want to separate your personal transactions from your business transactions. Ideally, you're going to have a business bank account, hopefully a separate credit card that you're using for business transactions. If you don't or can't for whatever reason, then I would highly recommend opening a separate personal account, um, which you can do easily with like EQ Bank or one of these sort of online only banks, and then using, the debit card. But if you use a personal credit card for both personal and business transactions, it increasingly becomes really arduous to look at that statement and separate out which goes where. Categorize. So you want to categorize each expense and post it to the correct expense in your books according to the nature of the transaction. So certain vendors, certain suppliers like Canva, for example, you may have multiple purchases from Canva that, depending on the exact thing you purchase, would go to different expense categories. Whether it's, the software that subscription, or if you're buying, some of the art, um, that may go to a marketing expense, or if you're actually using it to print out flyers, you can do that now. So that may be a completely separate expense. So within an individual invoice from Canva, you may actually have separate line items that go to different expenses. And that's important because consistency, you want the same things going to the same categories every time so that you can look at all of the printing costs for all of your flyers over the last 6 months and compare them month to month. And you can compare them to sales, let's say the following month. So that will give you kind of a proxy idea of, I printed all of these flyers, I passed them out, and the following month sales went up or stayed the same. And you can do some of that comparison to see what the results of your actions are on business results. If you don't keep things in the same categories, then you won't be able to draw those comparisons easily. It'll be a lot more difficult. Okay, bank reconciliation. Um, at a minimum, you want to review the bank statement monthly. We used to only be able to review the bank statement monthly because it was all paper. Now you can review it daily because you can log in online. So if you have a lot of transactions, you can review it and reconcile it, daily if you want to. But certainly you want to do it monthly. And um, you probably want to check in more frequently, at least to check your cash balance. You want to see if you're being paid and follow up with customers who haven't submitted payment in quite some time. It's important at month end to identify if there's any missed transactions. So, there may be bank fees that get taken out or insurance payments that get taken out of your bank account automatically, and you need to make sure that you record that in your accounting books. And then you want to make sure that the bank hasn't made any errors because they definitely can. And there's often a time limit on reversing those errors. So this is just an example from TD Bank. The fine print at the bottom says you have to report any errors or irregularities within 30 days of the statement date. If you don't, then time's up. Too bad. So I'm going to go through a very quick um, bank reconciliation. Um, and and then we will stop for questions. Um, it and it's pretty straightforward. Does everyone see the bank statement now?
Yes.
Yes. Okay. Okay. So here's a bank statement for sample company. Um, Pretty straightforward. And here is the report coming out of, let's say, QuickBooks for that same month for the bank. So you have various transactions. Those transactions should also appear on the bank statement. So what you want to do in a bank reconciliation is compare the books to the bank statement. It's a comparison exercise to make sure all of those things that there's nothing missing, and that there's no bank errors, there's no errors on your side or their side. So in a bank reconciliation, you would go through each bank transaction and mark it as cleared on the within the books. Or sometimes it's the opposite. You would mark it on the statement. Either way, you want to compare one to the other. So we have here on the 1st of September, this insurance payment for $385.31. And here it is on the income, on the bank statement, advantage, benefit. Yep. So I would mark that with a big X. Now here we have on the 14th, a payment, $69. Yep, I see it, X. On the 15th, we have a check number 110 to a storage company for 3 months of storage. That's for $600. We don't see that here. That's okay, because that is a check that we sent out on the 15th, and we see that it hasn't been cashed yet. So that's okay, it's fine, but it hasn't been cleared. And we go through this exercise all the way down. What we end up with is this. So all of the transactions that show on the bank statement have X's. They are cleared. And there are 2 transactions in the books that do not show in the bank statement. One is this check to the storage company, so it's still out there, it hasn't been cashed. Another one is this deposit. This is a check again from the receiver general. So this is an HST refund check that we received. And on the day that we received it, we put an entry into the books to undeposited funds to recognize that we received it, but we didn't actually deposit it in the bank until October 1st. So when we look at the online banking, we see the deposit of that $1,500 on October 1st. But as of September 30th, that deposit doesn't yet show. So then our bank reconciliation, what is the purpose here? It's to take the balance on the bank statement to add or subtract these uncleared transactions, and then to compare what the resulting balance is to what are balances in the accounting books, and to match it to make sure that there isn't any variance there. So this is what I'm showing here is sort of manually done bank statement. Within any of the accounting software, they'll have a module that does this reconciliation for you. I'm just trying to sort of show how it's done and the relevant components of it. So don't worry about having to create this bank reconciliation yourself. But what it does is it takes the ending balance per the bank statement, which I hope I'm not making anyone sick sliding this around everywhere. The ending balance is 1753. Okay. So that's the ending balance per the bank statement. And then we add or subtract in the uncleared transaction. So we have one deposit, what's called a deposit in transit. This is something that we've received, money that we've received, but it hasn't yet shown as a deposit in the bank. So this is this HST refund. So we add the deposits in transit, 1,500. We subtract outstanding checks. These are checks that have been written and are out there in the world but haven't yet been cashed. And the result is a calculated book balance of 2,653. And that should match the actual book balance. So let's look. The actual book balance is 2,653. So that's good news. If it doesn't match, then you got to figure out what's happening. Either something is in the bank statement that hasn't been reflected in the books, or vice versa. Oftentimes it is bank fees or transactions that happen at the very beginning of the month or at the end of the month, because those, transactions um, that don't get posted by the bank until the next month can interfere. But anyways, that is the overall idea. And cash is the most important thing in your business in terms of being able to pay your bills and pay yourself. So you want to make sure that you're on top of your bank account and nothing is going on there. So reconciling your bank account, very important. Okay. Um, I'm gonna break here. That's the end of the presentation. And I wanted to open up some time for questions, either primarily about what I've presented, um, but other questions are welcome as well.
If you have any questions, you can just unmute yourself and ask your question. So,
Actually, it's more of like bank accounts question.
Yeah.
I'm a fully online business in early stage, and
Mhm.
I want to open a business account. I got some suggestions which are grateful for as well on the chat, but I was wondering what you suggest for a business like me who is fully online and everything is going to be done online. And it's an educational technology company, and we may have also like international transactions.
Mm.
Uh, I saw the recommendation of Wise, and just also to give you more information, we are sole propriety right now, not incorporated. Otherwise, I heard Van is one of the best things, but I'm not sure. I'm just still exploring. So I wanted to get their idea of like which business account and credit card would you recommend?
Hmm. Um, Credit card, I don't know. I don't know enough about what the deals are at the moment. As a sole proprietor, because as a sole proprietor, you personally own 100% of the business, you can actually um, open a personal bank account for your sole proprietor business. Whereas if you're incorporated, you have to open a business bank account. So it can't be a personal checking account. So I would take advantage of something and this is just an example. There are many other banks like this out there, but a bank like EQ Bank that has high interest on deposits and is strictly online, then you'll be able to make some good interest on what you have in the bank. That that type of interest generating isn't often available in business accounts, although there are a handful of business savings accounts that do offer some minimal interest generating activity.
It's
Um,
I don't want to do interest just because of personal and religious
oh,
reasons.
okay. Yeah, totally
Yeah,
fair. Totally fair.
and when I was checking, I saw uh, what was the name of the bank? The BMO one, I guess, or
Hmm.
Wise would be better because I don't want to pay monthly fee just because they have my money in their bank account. I'm currently using TD, but I think TD has high fees for especially if there's an international transaction.
Fair
So,
enough.
and since I'm fully online, I don't need necessarily a branch or whatever. That's why I was wondering, do you still recommend EQ then, or is there any other recommendations that you would think of?
Um, this is not an endorsement of any bank. what I personally use for my individual banking is and have done for many years is a bank called Simply, and
Mhm.
their regular sort of checking account has no fees. It's totally online. You can order checks for free, so you can have checks, which can come in handy with the business. And the checking account is not interest bearing. Um,
Okay.
yeah.
Is it
So
simply financial?
yes, exactly. With two
Okay.
eyes.
Yes, I know that bank. Okay.
Mhm.
And you are recommending me to do your personal one rather than business because I'm not incorporated. And if when I incorporate, I can just move everything to another bank, right? It's not too hard. Just to double checking because I want to get incorporated but later on, but right now I'm too early stage, so.
Yeah, even if you opened a business bank account for your sole proprietorship, when you
Mhm.
incorporate, it creates an entire new entity. So you would have to open another business bank account for that corporation anyways. So
Oh,
I,
okay.
I would recommend taking advantage of the fact that you can use a personal bank account. It's just
Mhm.
a lot less paperwork, a lot easier to move money around as a
Mhm.
sole proprietor, using a personal checking account.
Okay. No, this is really helpful. Thank you so much. Thank you.
Yeah, no worries.
Can I ask another question regarding QuickBooks? Because do you recommend for somebody who doesn't have much background for in accounting and such, is the QuickBooks is the best way to go? Because I keep hearing about QuickBooks. Or is there any other suggestions you would say it's easier for somebody who doesn't have much background in accounting and wants to be able to still see how things work and their basically like numbers, know their numbers?
Okay, so QuickBooks Online uh, is I think good for some businesses. Um, it's definitely, I think, a good option if you sell products, like physical products, because for a relatively inexpensive price, it does have pretty good inventory management capabilities. Um, but there are much simpler software for especially for businesses that are really early days. So something called Wave is I think still free and is very straightforward. So I would have to know more about your business, but you may want to look into Wave because QuickBooks is like the issue with QuickBooks is that QuickBooks tries to have it both ways. They try to make it um, super functional for accountants, and they sell it to accountants and they say you got to use our product. Look, you can do anything and everything with our product. And then they turn around and they say to small business owners, look, guys, it's super easy, it's super intuitive, anyone can use it. And the truth is you can't have it both ways. So so I have found that business owners, there is a learning curve to using QuickBooks. When you're further along and you have, several products, things, some investments, when things are a bit more complicated, QuickBooks may be the way to go. But if your situation is super simple, QuickBooks may be too much. Having said that, I use QuickBooks. I always have done, but I'm also an accountant. So so just consider that there are more straightforward, easier options. QuickBooks is kind of the standard, but it's not right for everyone.
Yeah,
Uh,
no, that's really great information. I think somebody also has a
yeah.
similar question on the chat too. Yeah.
Yeah. Okay, Laura, I've been a solopreneur for many years, incorporated in 2021. Okay, no revenue, but Excellent. Grant funding. Congratulations. Sorry, I should read this properly. We have had no revenue since 2021, but 2025 received Idea Fund grant funding. How do I keep the monthly expenses separated when both office are in-house? In the past, all expenses were applied to my sole proprietorship, but I'm guessing now all the expenses should be applied to the corporation. Do you recommend Wave for a pre-revenue startup? Ours is a knowledge sharing platform for, oh, I know you, Laura, are for small scale farmers. And I'm a very important bookkeeper. LOL. Okay, let me think. Um, so if the corporation receives the grant funding, then you have to record the grant revenue. Um, you have to record that and the related expenses related to that grant project um, in the corporation's books. Um, I would not like you definitely want to keep expenses for the corporation separate from your solo venture separate. And if you're running both, if you still have your sole proprietorship running and you have this corporation running, um, you're running both of them out of the same home office, that's fine. What you're going to need to do is get a spreadsheet, add up the home office expenses, and then determine some way to allocate what the percentage split is for sole proprietor and corporation. And as long as it's logical and you use it consistently, that's fine. So one way to do it would be revenue. So but if you do it that way and one is pre-revenue, one has only grant revenue, it's going to be 100% one way and 0% the other way. So that may not be the great way. Probably the best way to do it is number of hours. So if you track the number of hours you work on the solo venture and the number of hours you work in a given week on the corporation, do that for maybe 6 months and then do the average and do it that way. That might be a good split.
It's a question. Most of my time now is dedicated to the startup, which is the
Mhm.
corp. And I
Sure.
haven't done taxes for that
Mhm.
ever. And I know I've heard, yeah, well, it doesn't matter if you don't have any revenue, Laura, you're supposed to do the taxes. Well, I didn't do it. I
Mhm.
will. But I'm going to get an accountant because this is
Mhm.
beyond my remit. But what then most of my time, and I mean like almost all of it, is dedicated to the startup. So does it make sense to just not really bother with or with a sole proprietorship if really there's not much going on there? Does that make sense?
Yeah. Um, if there's nothing really going on, then that's you can leave it. But it's not like a corporation where you have to do anything significant to dismantle it. So you can just leave it.
That's what I
And
thought.
yeah, yeah,
And then if I get a big project, it's like, okay, well, that's not part of my startup, then it will go in there
hmm
and that'll be for whenever it happens. But for
yeah,
now, like all of the expenses for the in-house office and just all of the
yeah,
regular expenses that I used to put for my solo
yeah.
entrepreneurship, I should be putting that into the corporation, right?
Definitely, definitely,
Okay. Okay.
because you want to draw down um, the income
Yep.
in the corporation as much as possible.
Yep.
And there's no purpose in having a net loss in a sole proprietorship
Mhm.
unless you have other income to offset it with. So if you have employment income and a sole proprietorship, then you can decrease your employment income by a net loss in your sole proprietorship in that year. But otherwise, a net loss in your sole proprietorship just goes away.
Yeah, it doesn't really mean much.
In a corporation, you're able to carry forward and back a net loss and use
Okay.
it in prior and future tax years. So that this is getting a little bit beyond
Yes, it
the
is.
scope.
It is.
But so but the answer I think you're looking for is yes, expenses should go against the income that you have and the time that you're spending.
Exactly. Okay. Thank
I'm
you so
gonna,
much. I appreciate the inputs.
no worries. We're
Nice to
at
see you again.
time. Yeah, nice to see you too. We're at time. Grace is asking about a nonprofit slash charity accountant. Um, Believe me, we have looked long and hard, and by we I mean CanWCC has looked long and hard for a nonprofit charity accountant. So I will share my recommendations with you separately in an email, Grace. But for the moment, I'm going to go back to Karine just to close out the presentation.
Thank you so much, Nancy, for this amazing presentation. Thank God this is recorded so we can all go back to it and review. And I really want to take a moment to just invite you to, if you are looking for more support, if you are looking at joining a community where you will feel really that accountability, become a business member at $99 per year. You'll have access to so many more resources, tools available to help you grow or thrive. And right now, good news is that we are launching a virtual co-working programming here at CanWCC for bookkeeping because we know it takes time to actually sit down to take care of your books. So those virtual co-working will start in May. It is a programming available for business members. So if you are not yet a business member, go ahead. If you are a business member, there is a link for you to join that circle space, and you will be added to the live room, and basically just showing up in the room with your computer, your calculator, your Wave or QuickBooks, whatever tool you use to do your book, or Excel. I love Excel. I think Excel is the basic. So even if you don't have any money to do anything, just come as you are, bring what you have, and start working on your books. And we also will have a live expert in the room, like Nancy or another member of CanWCC. We have Ashley, who's also a great, has a lot of experience in bookkeeping, just supporting you if you have few questions. But please keep an eye for any notification for the virtual co-working, and we would love to see you. We really are very excited to bring to you custom programming event that will really elevate your experience as a solo entrepreneur or tech startup, wherever you are in your journey. Everybody's welcome. Thank you so much for your time.